First of all, I'm going to delete this video. And when you watch the video to the end, you're going to see why. We're entering into a 3-year-long bull market. All your bags are going to pump for 3 years. You will be rich again for 3 years at least. And hopefully this time you keep all your money if you just sell when I tell you to. I'm going to prove it to you right now. P.S. But first we should have a little dip. You see, this is Bitcoin. We've got the two tops and the two tops. In the white area, in the oversold or overbought area, we've got a bearish divergence. Plus the S&P 500 at the 3-minute, we've got a, rising wedge. So that should dip just about down to about here, which is where? Okay, I drew this in for you more bigly. This rising wedge is right about here, and we're gonna fall to about the blue line. But what the hell is this blue line? It just seems like an arbitrary line drawn in the sand for no real reason, where we consolidated this entire period of time. I'll show you what the blue line is. This blue line right underneath this weird green erection is this blue line at $3,850 something. But it goes all the way back. Does this look familiar? Does this look familiar to you? This is the S&P 500. And it goes all the way back until it crosses here and then just doesn't cross ever again. Boom. What am I looking at? What am I supposed? This is where that blue line started. This orange line is this, the Fed repo rate. Huh? I don't get it. Let me explain this to you. Just take a look at this mental screenshot this. In March of 21, there was a point in time when they actually pumped the markets. The Fed actually pumped the markets. They wanted stocks to go up, even though stocks were going up, and it's only been about 8 or 9 months, but oddly enough, the price at which the Fed started pumping the markets was right around 3,800. 3,800. So after they pumped the markets all the way up to sky high, and then they suddenly said, hey, Fed employees aren't allowed to trade stocks because it's a conflict of interest. Then they dumped the markets. That's when $3,800 became a litmus test. It became a dividing line. And I'm going to show you this again. And the Fed, for some reason, has a vested, I don't know why, but they have a vested interest in keeping the stocks above 3,800, where they initially, 9, 10-ish months ago, started to pump the markets. Let me show you again. Okay, now you understand this? This is when the Fed, this is the reverse repo amounts and percentages. Amount of money that they put into, the reverse repo. Which means what they did was, starting right here, as the stock market did really well, starting right here, the Fed decided to give money to traders, to Lehman Brothers, Shearson Lehman Brothers, and I know they're dead. JP Morgan and Bank of America and all these huge banks, BlackRock got money from the Fed overnight to borrow money to buy stocks for the futures in the next day. Why here? Why this point in time? And that I don't know. What I do know is that if you look at the price that peaked here when the Fed employees were not allowed to trade stocks, and when it dumped, we never dumped and stayed under this blue line ever again. And now we have final consolidation on this blue line. Is that weird? That's really weird. That's really weird because, and number one, I don't know why, but this is base. This is base. What the Fed wants, and they allowed this push all the way up here. So they're going to allow this push all the way up here again. You never get you never get a single top. There's always some kind of double top, but this won't just be a double top because of this formation. Look at this formation here. Let me get rid of the orange. And look at how much money the Fed gave banks and trading firms to trade overnight. Okay, so this is easier to see. Boof, boof, boof. We almost had a right triangle. We almost had an ascending right triangle, kind of an inverse head and shoulders-ish look, but we kept getting faked out, faked out, faked out. But this time, we shouldn't have a fake out. Look at this. Look at this nice rounded bottom here. Beautiful rounded bottom. From this point in time. You might as well think of this as an Adam bottom, an Eve bottom. So if you think of this as an Adam and Eve, which it isn't, but it is in the sense that this is when the Fed started pumping money into the system. So if we zoom right in here, let's just zoom right in there. Here, bam, here's that blue line again, and we've got that consolidation right here on the blue line, sitting right up and down, over and under, over and under, over and under, over and under. Now we popped up, we got a double top. We should test this blue line one more time. Basically, we should test this blue line one more time and then finally go up. This should take about maybe a week or two. What's happened so far, and why this week or two? Well, the Fed just announced last week that they're not going to raise any more rates, and all the rates are going to be consistently raised at, 25 basis points for the rest of this year. They said that there's not any cause for lowering the rates this year, but they also said they're not going to raise the rates more than 25 basis points, which is no risk. It's predictable now. So when you have a end outcome that's predictable, and you have a stock market that's already oversold, way oversold, because people started selling when rates could have been much higher, but the Fed said, no, we're just going to keep it at 25. That's really bullish. All right, then what about crypto? You want to take a look at what's happening to crypto? It's not immune. Crypto tends to follow stocks anyway. But crypto has clearly printed some bearish signals. Let me show you. Here's Bitcoin. I think I already showed you this, right? That we have a bearish divergence on Bitcoin. What else? Let's zoom in. Here. We've got a straight line. This is Bitcoin on the 1 minute, so that means you're going to need to short pretty quickly. And yes, this is a parabola. This is a semicircle. You see this arch? 2 points here, almost 3 points, but look. We've got 2 nano rejections. We've got double rejections over the line on Bitcoin. And this is for the entire month. Ta-da! Screenshot this. This is the last couple months on the 10-minute candles. This is about what should happen to Bitcoin. It might not actually reach this target because the whole market is really bullish. We might only maybe get 618 the way down there. Oh, but finally we should look at macro. Take a look at this. This is obviously bearish. We have a rising, broadening wedge here, or another way of looking at this longer term is just a rising wedge that has 3 rejections over the red line. See this red line? Perfect. And 3 rejections over the red line. Or it could be either way, it's bearish. You know what this is? This is US government bonds over the 4-hour over the last 2 years. Yeah, over the last 2 years. And it's bearish. What does that mean? Let me explain it to you. When the government doesn't pay huge amounts of money, interest, to borrow money from nations, mega corporations, mega funds, and banks, the mega funds, nations, banks, and sovereign wealth funds from Saudi Arabia stop giving money to the nations for interest. So what ends up happening is, where's that money go? All the money that everybody from Saudi national sovereign funds to banks gave the money to the US government because the US government gave them tons of interest every year. And then suddenly the US government says, nah, we're not going to give you that much interest anymore, but can we hold your money? You think they're going to say, sure, hold my money, don't give me any interest? No, they're not going to do that. They're going to take that money out and what? Just buy Rolexes with it? No. They're going to put it, you got it, into stocks and into crypto. Ta-da! Here's the fun part. We're expecting a little dip, but that dip should be the beginning of a massive bull market. When is the bottom going to be? Possibly Chinese New Year, which is only a couple weeks away. Maybe not. If that does happen, and if that is the timing, we're going to let you know through bitcoin-signals.org. You're going to get rich this time. And this time, in order to keep it, you really should sell it at the top when we sell it. So I'm going to tell everybody when and how much leverage to use, and we're even going to trade altcoins at high leverage. Yes, there is a slight possibility, because our algorithm is so damn perfect, that you could still lose a little bit of money. But if you're careful and do some risk management and you're not a full go ape on everything, then you should do very, very well. Join bitcoin-signals.org right now, and we're going to tell you how much leverage to use on this short that we're currently in. You should start selling things, and to get the exact timing on when to start buying, again, we'll tell members in our VIP private room at bitcoin-signals.org. Get rich. Let's get rich together this time, and stay rich.